What's up, traders? Welcome to today's bonus Equity Empire chart analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, I'm going to be taking a look at Tesla. And the reason I'm looking at Tesla is because Tesla reported their quarterly earnings performance for the first quarter, and they missed Wall Street analyst consensus expectations for both sales and earnings. They reported 19.34 billion in sales when Wall Street was looking for 21.43 billion. So that is substantially below expectations, and they also missed on earnings expectations. That said, even with that bad earnings report, Tesla's down less than 1% after reporting those difficult numbers. And so maybe a lot of the negative news is already priced into Tesla. And if that's the case, maybe we are nearing a buying opportunity in Tesla. Not just randomly going to pick a spot to buy. We're going to do two things in Tesla chart to analyze the technical conditions to see if we actually would want to buy or sell Tesla. Those considerations are: what is the trend and what stage of the trend are we in? And then, are there clues where the big money's stacked up trying to buy or stacked up trying to sell? So, stages of the trend. Since July of last year, basically through the beginning of November, Tesla was in a choppy to sideways trend. So we're going sideways for several months before the election. Then right at the election, Tesla took off and entered an uptrend. So Tesla was in uptrend all the way through the middle of December. Middle of December, Tesla once again started a sideways trend. And then in early February, Tesla broke that sideways trend and entered into a downtrend. That downtrend bottomed out in early March, and we once again started going sideways. Now the question is, what's going to happen next? Well, this is chart analysis. This is not crystal ball analysis. We're just looking for clues in the charts, and right now all we know is that we are currently in a sideways trend. We do know that Tesla's down more than 50% from its highs, and we do know we found some support in the low 200s price range. But let's try to get a little specific as to where the big funds may be stacked up trying to buy. And there's a pretty nice looking clue right here of a support level where institutions might have a whole bunch of buy orders stacked up trying to buy Tesla. There's the clue, and that price range is 223 to 212, and Tesla has bounced off of that 23 to 212 price range 2 times, 3 times, 4 times, 5 times in the last basically 6 weeks. We bounced off of that support level. So that's a pretty good clue that there are likely to be some big funds, maybe several big funds, stacked up trying to buy Tesla in the 223 to 212 price range, because their fundamental analysis tells them that there is value in Tesla shares, and that's why they're buying there. So maybe Tesla has discounted a lot of that negative operating performance, and maybe these big buyers are looking farther into the future. All we know with the technical chart is we're in a sideways trend. That's a strong looking support level. So if you're looking for an entry point for a long-term position, you think the prospects for humanoid robotics and driverless cars, if you think the future is bright and you think Tesla will be a major player and make a lot of money on future products, then that is a pretty good clue of where the big funds are trying to buy. That may be a clue of a price range that you might consider doing the same. Just below there, there's another support level in the 179 to 164 price range if you wanted to be a little more price sensitive. Let's go assess where we might run into resistance if Tesla starts heading higher. And there are several resistance levels in Tesla to consider. There is a resistance level that we're currently touching up against. There's another resistance level just above that in the 257 to 261 price range. Another resistance level above that in the 266 to 274 price range. And another resistance level above that in the 281 to 282 to 291 price range. So what have we accomplished in today's chart analysis session? We've taken a look at one of the most high-profile companies in the world, one of the most highly watched stocks in the world. We have noticed that they reported financial performance that disappointed Wall Street. We've also noticed that Tesla didn't drop after that fundamental operating disappointment, so maybe that's a clue that we might be in a bottoming process. And if we're bottoming, maybe there's a maybe that's time to consider entering a position for a long-term hold, or maybe even for a short-term trade. But we're not just going to willy-nilly hit the buy button. We'd be looking for a clue where the big funds are stacked up trying to buy, and we've identified 2 support levels that could be providing that kind of clue. And then we've also identified 4 resistance levels where there could be clues that institutions have some remaining sell orders. So that is today's review session on Tesla. If you're new to trading, hope you learned something new. If you've been trading for a while, maybe I was able to identify a support or resistance level that you hadn't considered in the past, but hopefully you got something out of this session. I will be doing more of these review sessions on a daily basis going forward. In the meantime, I wish you the best in your trading and investing, and we'll see you soon.